Right now the market is deciding on the appearance of the 60-minute bar. So far an inside bar, the bears would like it to close on its low. At a minimum, the bulls would like to put a big tail on the bottom of the bar. Nothing has changed. I still think after consecutive sell climaxes over the past 3 days, today will probably be a trading range day. Remember, bar 12 might close above the open of bar 1, creating a bull body on the 60-minute chart. Swing bulls are still on their long above 7 for a possible low today. Swing bears are still on their short stop, maybe above 9. Usually, I think the market does not tighten the stop until after a new low. So if 11 or 12 fall below 7, then the stop for the bears gets moved down from the 3 high to 1 tick above the 9 high. If we do get an inside bar, and it looks like we will, then the 60-minute bar becomes a pullback from this big bear breakout yesterday. So you have to ask yourself, do you think it's a strong breakout pullback short? We've had consecutive sell climaxes, 3 pushes down. We're clearly in a bear trend. So obviously traders can short, but their stop is way up here. I think it's probably not a very good sell, and that there probably are buyers below the 60-minute low, especially if this bar has a big tail on the bottom. Bad signal bar for the bears, 3 and 9. Bad signal bar for the bulls, 11. Right? Again, consistent with trading range price action. Traders are constantly disappointed by everything, by breakouts, by follow-through, by entry bars, by signal bars. So all of that is a sign that the market is more balanced than what it might appear to be, and it increases the chances that we'll have a lot of two-sided trading. In other words, trading range today. Bad signal bar for the bears, 3, 9. Bad signal bar for the bulls, 11. You can see in the final minutes of the 60-minute bar, bulls are making the 60-minute bar less bearish. Right? They're putting a tail on the bottom of the bar, and they might even get the 12 close to be above the 1 open and put a bull body on that 60-minute bar. Well, the bears still a breakout pullback short. With the bulls, they're still hoping 7 is the low of the day. To me, it looks like we're probably going to test down at least a little bit more, but it is possible that 7 is the low of the day. So what to do here? There's no really good option, right? You could be swinging a short, stop above 9. You could be swinging a long, stop below 7. I think if you get stopped out on the long, I would look to buy again. Or you can wait to see if we get a strong bull breakout and then buy. I still think the odds are we're in a trading range. Buy low, sell high, scalp. We're low, I'd like to buy. But with that 60-minute bear body, I would also like the market to fall below the low of that 60-minute signal bar, sell signal bar, and then reverse up. So I'd like to see one more push down on the 5-minute chart for a wedge higher low major trend reversal or lower low major trend reversal. For the bears, low too short, 2 legs up. Not a very good signal bar. Trading range so far today. The bulls are hoping 7 is the low of the day. If it's not, we'll probably reverse up after a downside breakout. We may have to go below yesterday's low. The bears are hoping that the channel down continues and that we fall below 7 and get a measured move down. It's possible, but with the consecutive sell climaxes, I think it's more likely that we're putting in an early low of the day. Will not become higher probability for the bulls or bears until we get a better signal bar for the bulls or bears or a strong breakout. Can we form an II on the 60-minute chart? Sure, right. I think we have a lot of bull bars here, and bull bars, good-sized bodies closing near their highs. So we're building up buying pressure. Increases the chances that we will work higher. Do I think always in long or short? I think it's not clear. From what I'm saying, you can tell that I think we're going to go higher. What I don't know is whether we have to get one more push down before we go higher. My preference is that we get a bear breakout and then a reversal up, because I'm looking for clarity, higher probability. Instead, we may simply get a bull breakout here and then the measured move up. Bulls trying for their breakout. 15-minute chart, an II, but bear bodies. Actually, that last one was a bull body. Can you buy at the market as this is going up and then put a stop below 16? You can. I think we're probably always in long. The bears are hoping for a low too short, 2 legs up, 9 and 16. Bulls would like to get follow through buying on 16. Trading range, so you have to suspect that follow through will be bad. 6, bad follow through 7. 7, bad follow through 10. 10, bad follow through 12. So 17 is an important bar. It gives us information. Is this a low too short after a bear breakout? And will it then be followed by a new low of the day? Or is it a bull breakout that will be followed by a move up to the high of the day and the trend line? See, there was some urgency by the bulls. As soon as 16 closed, they bought it. You can see the 17 low never dipped below the 16 close. So that tells you that the bulls did not place a limit order at the 16 close. As soon as 16 closed, they bought the market, right? So that meant they were more eager to get long, which is good for the bulls. But they really need a follow-through bar here. They need this bar to close near its high. At a minimum, they need a bull body. For the bears, if 17 is a bear reversal bar, it's a low too short, with the first leg up being here. The bears today had three bars down here, but the bulls have had 3 bars up here, here, and now here. You'll have some 4-point bulls taking profits up here, right? 4 points. They bought the 16 close. They get filled on the 17 low, or maybe 1 tick above. So they get filled around 1980 or so. And they have a limit order at 1984. And you can see we hit the price to the tick. That tells you that there are a lot of sell limit orders there from bulls trying to take part off at 4 points. In a situation like this, when I think a trading range is likely, I not usually, but very often try to get out 1 tick early. So instead of getting out at the exact logical 4-point location, I place a limit order 1 tick lower. For the bears, they're still hoping for a low 2 with bar 9, but we have a breakout 16 and we have follow through 17. Yes, the follow through 17 is not very good, but it's enough to increase the chances that we'll get a second leg up if we pull back here. We're again testing yesterday's 16 low. We had that same situation here, but we had a breakout point. We broke out, we tested that breakout point, did not get above it. And then later in the morning, we tested it again and did not get above it. And we formed a double top bear flag. Tried to get a bull flag here. got a small breakout of a small bear breakout, a wedge bull flag, and then just pulled back endlessly and accelerated into the close. But anyway, the point I want to make is that we got a double top testing a breakout point, and today the bears are trying to create a double top testing that breakout point, but the context is different. I think the context is better for the bulls.